Welcome you all for the course Banking Theory, Law and Practice. The topic of this session is part 3 of lendings, in which we are going to see the types of collateral securities. Individually, we have seen what are all the types of collateral securities in the previous session. Let's go in deep. What are all the advantages and disadvantages of such types of collateral securities? And what are the factors that are to be kept in mind by the bankers while advancing against such kinds of collateral securities? That's what we are going to see in this session. See, bankers accept different types of securities for advancing loans to customers. In those cases, the sum of the important collateral securities are accepted against which the advances are made. What are such collateral securities? Stock exchange securities, goods and titles to goods, bills of exchange, life insurance policy, and properties, and also the gold ornaments. Let's see one by one. The stock exchange securities. The securities such as equity shares, debentures, and bonds issued by the reputed industrial houses that are accepted for providing loans. Besides, the loans are available against eligible gilt-edged securities such as the first-class securities issued by the government or by the semi-government institutions. Advancing loans against stock exchange securities is found advantageous to the banker on account of different reasons. What are such reasons? We are going to see one by one the reasons and advantages. Such advantages of stock exchange securities are easy sale of securities at the stock exchange, then easy transfer of ownership of securities to the bank in any emergency. It can be transferred, the ownership can be transferred. No loss on sale of securities such as bonds, etc., as their prices do not widely fluctuate. And easy rediscounting facility with the central bank in times of emergencies. In spite of all the advantages mentioned, the lending against stock exchange securities is in fraught with the following drawbacks also. What are they? Try to understand. Difficulty in making the sale of certain securities and risk of advancing the loans against the partly paid securities. Of course, you know pretty well the sale of certain securities will be very much difficult, so that the money cannot be realized, amount cannot be realized to compensate the loan which is in due. And the risk of advancing loans against the partly paid securities. You cannot lend, as a banker, you cannot lend money to the partly paid securities. In view of the difficulties experienced by the banker in lending against stock exchange securities, it is essential that banks bear in mind certain basic factors while advancing the loans. What are such factors? See here. Ensuring the clear ownership of the securities. First of all, once a customer come and ask for pledging the securities, you must be very clear that who is the owner of such securities, ensuring the clear ownership. Then do not lend against partly paid up shares. No loans for partly paid shares. And do not lend against securities which are not easily saleable in the market. The securities which cannot be sold out in the market will not be given advance or should not be given advance. And not to lend against securities whose prices are subject to wide fluctuation. Once you got fluctuating securities and lent loan or lent advances will not be valued as like you want to compensate in the near future, so that you should not allow or you should not take into account the fluctuating valuation securities. Then you must maintain a margin, maintaining sufficiently wide margin between the loan money and the value of security. These are all the factors to be considered while advancing against such securities. Let's go to the next. Goods and titles to goods. Goods and documents of title to goods is another popular type of security against which the bankers advance loans. Titles to goods against which loans are granted include warehouse certificates, railway receipts, loading bills, dock warrants, etc. Goods are hypothecated to the banker, although goods physically remain under the custody of the borrower. Further, it is also possible for the borrower to make a sale of those goods. There are different advantages of lending against goods and documents of titles to goods. What are they? The goods can be easily sold out. Easy sale of goods in times of emergencies, and consequently there is no suffering of loss for the banker. Easy evaluation is possible in the value of goods, easy evaluation of value of goods for the purpose of lending. And advantage of physical nature of securities, advantage of physical nature of securities, because you are going to have the physical security, physical stock and physical goods. In spite of so many advantages claimed by goods as security, bankers may also face some of the problems while lending against these securities. What are they? Let's see one by one. Need for arranging for go downs in the event of having to keep such goods in its own possession with attendant difficulty of inconvenience and expense. Of course, you have to obtain the goods and you have to secure and go down, putting some security guards for safeguarding those things, and it will be of expensive nature is a disadvantage in the case of obtaining the goods and title to goods as a security. Sometimes the danger of goods perishing while in the custody of the banker and consequent to heavy loss, and difficulty of evaluation of the goods, danger of price fluctuations, danger of price fluctuations. These are also happening in the case of the goods and titles to goods which are obtained as the security against advances. And in view of the difficulties experienced by the banker in lending against goods and documents of title to goods, it is also essential that banks keep in mind certain basic points, basic factors while advancing loans against the goods and titles to goods. What are they? Listen, the factors to be considered: scientific evaluation of goods. Scientifically, you have to evaluate all the goods possessed or obtained against advances. And do not advance loans easily against perishable commodities, not advancing loans easily against perishable commodities. And adequate margin between the value of the stock and the amount of the loan granted, that should be maintained. Lending against saleable goods. Lending against saleable goods, that should be properly advocated, and satisfying the genuineness of titles to goods before advancing loans. You must satisfy the genuineness of titles to goods before advancing the loans. And carrying out a periodical inspection on godowns in which goods hypothecated to it are stocked to ensure safety of the goods. These are all the factors to be considered while advancing against goods and titles to goods. And bankers are very much careful, or to be very much careful in advancing the loans against goods and titles to goods, considering those factors. Another type of security is bill of exchange, bills of exchange. Bill of exchange constitutes another important type of security accepted by the banker for advancing loans. Loans are provided either by way of purchasing or discounting the genuine commercial bills in possession of the traders. Under a discounting of bills, the banker advances the present worth of the bill amount after deducting its commission. Bills serve as ideal security for the banker since it is possible for the banker to have the bills rediscounted with the central bank. Although the bill of exchange are obtained as a security, there are different advantages. What are they? There are many advantages accruing from loans given against bill of exchange. For instance, there is no possibility of any loss being suffered by the bank, as the value of these exchange bills not subject to change. Further, the bills can easily be encashed when found necessary. The loans can also be easily recovered, easy recovery. Despite these advantages, the bankers will also face some disadvantages in the case of bill of exchange, which is obtained as the collateral security against advancement. What are they? The bill financing poses considerable problem for the banker. For instance, if the who is dry debtor does not make payment on the due date of the bill, the banker becomes liable to make payment of the bill to the customer who is creditor. And many a time it becomes necessary for the banker to move to the court to realize the amount due on the bills discounted by it, so that the bankers will avoid taking bills of exchange as collateral security. Let's go to the next type of security, which is called the life insurance policy. Banks also advance loans against security of life insurance policies. Lending against life insurance policies is attractive for the banker in as far as the surrender value of the policy can easily be found out from the life insurance corporation. Further, there is no possibility of any loss to the bank from a loan given against security of the life insurance policy. There are some advantages. What are they? In the case of life insurance policy, which is obtained as a collateral security, the surrender value can easily be evaluated. And further, before advancing a loan, the bank can get the policy assigned in its favor too. So getting the policy is possible and no possibility of loss in the case of life insurance policy. Despite its merits, lending against life policies is fraught with certain disadvantages. We need to understand, for instance, it is rather difficult to find out the surrender value of the policy. Exact surrender value cannot be found out. And the bank may have to make the payment itself to prevent the policy from lapsing if the insured party does not pay the premium. In view of the above, a banker will have to keep in mind some of the factors before granting loans against life insurance policies. What are such factors? Once they keep in mind these factors, they'll be able to easily approach the customers, getting the life policies and granting advances. The ascertainment of surrender value of the policy before loan is granted. Before the loan granted or before sanctioning of the loan, banker will have to make out the surrender value and ascertain the surrender value. And the banker not to lend more than the surrender value, more money than the surrender value. Or the amount suppose is applied for 10 lakhs and surrender value may be 7 lakhs. The banker not to lend more than 7 lakhs. Then lend as far as possible only against the endowment policies, which is better to make out the possibility of profitability. And to get the policy assigned, getting the policy assigned at the initial stage itself, to get the policy assigned in its own favor before granting the loan. These are all the factors that are to be kept in mind by the bankers while advancing against the life insurance policies of the customers for granting advances. And if they fail in which the granted advance will not be or cannot be recovered in near future and it will become overdue. So that the bankers are to be very careful in doing the advancement or advancing against the life insurance policies. Then another part of collateral security is property. Property that include both movable as well as immovable assets. Movable assets include gold, silver, finished goods, stocks and shares, bill of exchange, etc. Immovable assets are land, buildings, plant and machinery, equipments, etc. Lending against movable properties is advantageous. All properties of both nature are considered for lending advances as obtaining collateral securities. But what are the advantages in that case? See here, it is possible for the banker to dispose of the assets easily. Whenever the customer fails to repay, the assets can easily be disposed of to the extent of its value on the particular day of disposal. But the assets should be disposed by the evaluation of the assets on the day itself. There may be a fluctuation, which may be the disadvantage that we are going to see. Another advantage, easily saleable assets, whether it is movable or immovable, the assets should be of easily saleable in nature. There are some disadvantages. The loans given against immovable properties involve considerable risk for the banker because of the difficulty in selling the assets on a day on which they propose to sell out. Besides, it is not easy to evaluate immovable properties also. It is not easy. Evaluation is not possible. It is highly impossible in the case of immovable properties. There is also considerable difficulty in locating the real ownership of the immovable property pledged with the bank. Further, the lending against immovable assets entails a lot of expenditure in the form of inspection, management, and repair of the properties pledged with the banker. It is, of course, you need to understand lending against immovable assets so that you have to maintain such assets for which you have to spend more money in the form of expenditure for inspection, for supervision, for safeguarding and securing, and also managing those assets. And in the case of repair, you will have to spend money for repairing and restoration or rejuvenation of the assets. These are all much expensive, so that the bankers will face this kind of disadvantages in obtaining the property as the collateral security. These are all the factors that are to be kept in mind by the banker in advancing against the property also. Next, we go for the gold ornaments. Specifically, I am taking the gold ornaments here. Gold ornaments are one kind of the movable asset, right? Which may also be obtained as a collateral security for advancement. It is another type of security against which the advances are made by the bank. But there are some fundamentals as per Reserve Bank guidelines. Loans sanctioned by banks against the pledge of gold ornaments and jewelry should not exceed 75% of the value of gold ornaments and jewelry. Suppose they apply for 10 lakhs rupees of loan with the gold ornaments pledged, that should be evaluated and 75% of the gold ornaments value. And you valued the gold ornaments worth of 12 lakhs, 75% may be allowed as advancement. That means 9 lakhs, not more than. Accordingly, fresh gold loans sanctioned on and after April 1, 2021, the next year, shall attract a LTV ratio of 75%. Right? These are all the conditions under which the gold ornaments are taken as collateral security and advances are made by the banker. Then there are some facilities in the gold ornaments. Loan dispersal in a few minutes that can easily be availed by the customer, and banker will disperse in few minutes today. And quick and easy documentation. Need not wait for so many times. and you can easily obtain the document from the customer, and you need not ask the customer to wait and all. And complete safety of jewelry, that will be ensured by the banker. And no bank account is required to avail the gold loans or gold ornament loans. These are all the conditions of collateral securities against which the advances are made. I hope you would have understood all the fundamental and ideas of the lending part 3 about the collateral securities. What are the collateral securities and how far the advances are made by the banker against the collateral securities, and what are the advantages and disadvantages, and what factors are to be kept in mind while advancing against the collateral securities by the banker. Banker, of course, have to be very careful in obtaining all the documents, verifying, evaluating, and concluding before advancing against collateral securities. They have to verify the collateral securities and advance against the collateral securities is very, very, very significant. I hope you would have understood every component. And with this, I wind up this session and wish you all the best.